Hi everyone, in this video I'm going to do a brief review of DraftKings earnings third quarter results. The stock was down roughly 20% after announcing these figures, so let's look at what investors were so displeased about from DraftKings in the third quarter. Overall revenue increased by 136% in the third quarter to 502 million. This was driven by several factors, including increasing customer engagement and expanding to new markets that weren't in its results this same quarter last year. Still, the company lost 450 million on the bottom line, but it was less than the 545 million it lost in the same quarter last year. Finally seeing some economies in scale here in DraftKings as revenue is expanding, net losses are contracting a little bit. Monthly unique players increased by 22% to 1.6 million. The company has been investing aggressively in attracting new customers as it expands to new markets across the US and Canada. Of course, DraftKings is regulated like a gambling company, so it must get approval to operate in each new state. And as it gets approval to operate in each new state, it undertakes an aggressive advertising campaign to attract customers. And so far, it's been doing a good job in attracting customers. However, it is costing them a pretty penny, but at least you can see some results in that they are getting customers and they're increasing engagement among existing customers, as average revenue per monthly unique player jumped by 114% to $100 as more players are engaging with its sportsbook and iGaming products. Of course, this is a higher revenue product from DraftKings compared to its legacy daily fantasy sports product. And so, as its customers are migrating over to the sportsbook and iGaming, it's increasing the average revenue per customer. The company raised its revenue outlook for 2022 to 2.18 billion, up from the previous forecast of 2.13 billion, which if they meet that forecast in the fourth quarter, it would represent 68% year over year growth. This would be a slowdown from previous years where the company was growing near triple digits, and so revenue growth is decelerating. What had investors disappointed in DraftKings and why, in my opinion, the stock is down considerably after this announcement. They issued 2023 revenue outlook, which calls for 2.9 billion in revenue, which would only be 33% growth. That would be half the level of growth from 2022 and considerably below 2021 and 2020 revenue growth rates. So revenue growth is decelerating quickly for DraftKings. And then so additionally, the company launched its sportsbook in Kansas on September 1. Not a very large market for gambling in that state. The big state was California, and DraftKings earlier in the year was optimistic that Californians were going to legalize sports betting when the election here that's upcoming in early November. DraftKings thought that they were going to be able to legalize online sports betting. Now that's looking not that like it's not going to pass. Support here in California for the initiative is low. Support against the initiative outweighs the support for the initiative, so it doesn't look like it's going to pass, and that's going to be a big blow for DraftKings prospects because California is arguably the largest, could be the largest sports betting and iGaming market for DraftKings and others, given its large population of relatively wealthy consumers that are used to placing wagers and placing bets because California has many card rooms, casinos, horse racing tracks, and all of these types of things where the citizens here in the state are, there's a lot of people that enjoy gambling. And so investors were hoping that it would get legalized here and then DraftKings could enter the market at some time in 2023. Those hopes look like they are getting shut down. And even if you look at DraftKings press release, they removed the statement that was there in the previous quarter, which said that they were optimistic about passage in California. I read the press release in this statement, and that was removed from there. So they're it doesn't look like management is optimistic about entering the California sports betting market, at least in the near term. Eventually they may get entry into the market, but at least for the near term, that does not look like to be the case. Okay, so before these earnings results came out, I had DraftKings stock listed on the borderline between a hold and a buy. And after these earnings came out, I would place DraftKings stock closer to a hold, less likely as a buy because of the diminishing prospects of gaining access to the California market. I would be less enthusiastic about purchasing DraftKings stock. I would like, if I was an investor interested in DraftKings stock, I would wait at least one more quarter, maybe two more quarters, to see what the outcome of this of the election here in California is in terms of the sports betting. And then I would like to see management's reaction to those results and how they perceive their prospects for entering the California market, perhaps in the next, maybe not this year, but in the next year or in the next 3 years. I want to hear management's reactions to that and their thoughts regarding their prospects to enter the market eventually. So for now, I would not recommend buying DraftKings stock. Okay, so that's all I've got for this DraftKings earnings review update. If you think I've added some value to your investing journey, please go ahead and hit the like button. It'll help me make more videos like this one. And thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.